Assalamualaikum warahmatullahi wabarakatuh. We are from Group 7. We'll be presenting on the tax treatment and tax implication for specialized industry under air transport. So we chose Asia Berhad for our research project. So my name is Nuri Shahida and my group members are Nur Hakima and also Nur Fana Izian. So this is the outline for our presentation. First, we will discussing on about a little bit introduction of our research project, and then about the Asia company background and also the objective of our research project. Second one, we'll discussing on the literature review and also research design. Next, we'll explain about the finding for our research project. We will discussing on the tax treatment for Asia Berhad, and the last one about the limitation, implication, and also conclusion. Okay, next. First of all, for the introduction, under Income Tax Act 1967, under Section F, it mentioned about the specialized industry for the air operators. It refers to any operator of business activities related to transportation of passengers or cargo by air. For the resident, tax will be accessible based on the world scope basis under Section 54(2)(e). It means that airline operators are accessible on a world scope basis, whereby the income is accessible wherever it is accrued or derived from Malaysia and also other country. For the non-resident, tax will be accessible based on the gross income which is derived from Malaysia only. So non-resident airline operators will have its chargeable income assessed based on either the 5% method or the acceptable ratio certificate method, and under both methods would be subject to a tax rate of 24%. However, there are three things that need to be excluded in the computation of tax. So any goods and passengers which are related to transshipment, casual call, and refunds are excluded and would not be taxable. So these three things will be explained further in the findings part.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nora Hakimah, and now I'm going to share with you a little bit about company background of Air Asia. Air Asia was established in 1993 and started its operation on 1996. Originally, it was founded by TRB Highcom, but then CEO Tony Fernandez was purchased the company in 2001. Air Asia is well recognized as the only Malaysian-based low-cost airline and one of the largest low-fare carrier in Asia. Next, Air Asia is one of the successful business that has adopted cost leadership strategy on its whole operation. And the best motto of Air Asia, now everyone can fly, means to giving an opportunity to all people to fly with the lowest possible fare. And next, for the research objective, the purpose of this study is to expose ourselves on several methods in the specialized industry, particularly in Air Asia Group Berhad. Basically, it consists of three specific objectives, which are we want to evaluate tax implication and tax computation of Air Asia. Second, to review of how tax incentive or Air Asia will be treated, and the last one to gain more insight on what the impact of the COVID-19 to the industry.
Assalamualaikum, I am Farhana Izian binti Zuraidi and will proceed to the literature review and research design. In the literature review, cited from Charles E. Smith in his study titled Air Transportation Taxation, The Case for Reform, the airline industry plays an important role in efficiently moving goods and people. But the method of taxation in this industry has not been thoroughly researched and studied into yet. The airline industry has specific computations in assessing their taxes, with the most significant being that it is taxable on a world scope basis. However, despite being part of a specialized industry, the air transport industry does not have significant or specific tax exemptions and incentives. Some of the main focus in regards to taxation within the airline industry are indirect taxes, as companies in the aviation industry may be subject to a wide range of taxes. Taxes include ticketing taxes, airport taxes, landing charges, and departure taxes, which have been implemented by the government. Another sector which this paper tries to focus on is in regards to withholding and double tax agreements, which is prominent with airline industry companies, such in regards to rent or other payments for use of movable property. Some of the activities within this scope are slot hire, leasing of ships, time charter, and voyage charter. In completing this research, the research method was done through self-findings on journals and papers in regard to taxation of air transport and shipping industry, and through careful review of taxation guidelines such as through Lembaga Hasil Dalam Negeri and Malaysian Aviation Commission. Further research was done through an interview with an experienced and qualified officer in charge of taxation to receive hands-on and a clearer understanding of the structure of taxation of companies within the airline industry. We managed to interview the head of tax of Red Bit Ventures, Ms. T. Ling. Red Bit Ventures is basically a subsidiary of AirAsia, and she is responsible to handle investor relations and any inquiries regarding AirAsia.
Okay, next we'll be moving on to the findings part. So the first thing will be explain about the tax treatment for the resident and non-resident. And second one, tax relief for a share berhad. So the tax relief will be based on the double taxation agreement between two countries. And also we'll explain about the withholding tax, which should be referred to the double taxation agreement, DTA also. And the third one, about the capital allowances for a share berhad. So they can claim the capital allowances if four conditions are met. And the last one about the tax incentive for the airline operators like Asia Berhad. So there's no special incentive for airline operators. So all of this will be discussed further in the next slide. Okay, next will be the tax treatment. So there are different between the tax treatment for the resident and non-resident for the Asia Berhad. For resident, the tax will be assessed on the world scope basis as I mentioned in the introduction. It's not like the other countries, which the business will be assessed based on the territorial basis. Means that income derived from Malaysia will be taxable in Malaysia only. So this is the main difference of tax treatment for the air operators, include for the Asia Berhad. And as for the non-resident, tax will be assessed on gross income derived from Malaysia. It refers to all sum receivable by the operator in the basis period in respect of transporting the passengers and cargo by air. So this will exclude three things that I mentioned in the introduction. The first one, it will exclude if the transport brought to Malaysia for the transshipment from the one aircraft to another, a ship to an aircraft, and also an aircraft to a ship. Next, it will exclude any transport under a casual call. Casual call means that it is a mention call by an aircraft that is owned or chartered by the operator. And also, it will exclude any income from the refund. Okay, next for the double taxation agreement, or we call it as a DTA. So DTA is applied for the entitlement of tax exemption, or we call it a tax treaty. It may require tax to be imposed by the country of residence and be exempted in the country in which it arises. So the main purpose of DTA is to divide the right of taxation between the contracting countries, to ensure the taxpayers equal rights and security, and also to prevent the avoidance of taxation. The minister exempt a person who is a resident in respect of income from the profit of air transport businesses in international traffic. So the air transport business includes which includes the aircraft operation in international traffic will be excluded. So it includes profit from the joint business or any international operating agency. Second one is profit from the rental of ships or aircraft on a full or bareboat basis. And the last one, profit from the rental of containers and related equipment which is related to the international operation of aircraft. So all mentioned above will be exempted from being taxed when the DTA is applied. However, there are some countries that do not apply the DTA. So the domestic tax legislation will apply to the cross-border transaction between the two countries, unless there is special relief provided under the domestic tax legislation for the non-tax resident only.
The next finding is withholding tax. As stated in the official portal of Inland Revenue Board of Malaysia, withholding tax is an amount being paid to the Inland Revenue Board of Malaysia by the party making payment payer on the income earned by a non-resident payee. Mentioned in the Inland Revenue Board of Malaysia's Public Ruling No. 10/2019 on withholding tax on special classes of income, paragraph 4A3 of the ITA, consists of rents or other payments made to non-residents for the use of any movable property, which include rents or other payments made for the use of oil rigs, boats, ships, cars, aircraft, or other equipment in or outside Malaysia. Regarding the withholding tax of AirAsia, as mentioned in the interview by Ms. Teeling, it must be referred to the DTA in order to get the relief. This is because AirAsia is considered as the payer as it made payments for the use of any movable property, flights, and charged to the non-resident payee. She also did mention that AirAsia does not have withholding tax on leasing payments made to leasing companies, as this income is exempted as provided by DTA. The other finding is on capital allowance. Capital allowance is basically the business income deduction in lieu of depreciation expenses paid in the acquisition of business assets. There are four conditions in order to claim capital allowances, which are operating a business, purchase of business assets, assets are being used in the business, and the owner of the assets. Two types of capital allowances are initial allowance and annual allowance, and they have different rates based on asset types. Based on the interview by Ms. Ling, she did mention that AirAsia does not own any airport. Due to that, in terms of industrial building allowances, it is the same treatment with other businesses, which are 10% on initial allowance and 3% on annual allowance. In the Public Ruling No. 3/2018 on qualifying expenditure and computation of industrial building allowances, the eligibility to claim industrial building allowances comprises IA and AA, or AA only at the rate prescribed for each type of industrial building. In general, the rate for IA is given at 10% of the QBE and the rate for AA is 3% of the QBE, unless it is stated specifically at a different rate. It is further explained that IA shall be permitted to a person who has incurred QBE for a year's assessment of the construction or purchase of a building for the purposes of his business and for a year's assessment at the end of the base term based on point B, which is the building was in use or was about to be used as an industry building. In addition, AA shall be permitted to a person who has incurred a year's assessment, whether the person is the owner of the building or the building was in use for purposes of the business. As mentioned earlier, AirAsia does not own the airport, but it is used for the sake of the main business. Therefore, AirAsia can claim the capital allowances, but there is no specific section for aircraft. Lastly, from the interview, she did mention that the tax incentives for airport transporters, Malaysian Airlines and AirAsia have the same incentives. Under Section 127 of Income Tax Act 1967, there are no special incentives for the airline industry, as the same incentives are applied for all industries. It needs to be referred to the Ministry of Finance depending on the investment that has been injected. She also mentioned that the tax incentives are not exempted from the profit, as the airline industry is very difficult to make profit. The airline industry can get the allowance, and if they have not fully utilized, it will be carried forward to the next year. Incentive under Section 127 refers to the Income Tax Act 1967. It is applicable to those who have incentives claimable as per Government Gazette or with a minister's approval letter. For AirAsia, it involved incentive on operational headquarters, as stated in the appendix in Income Tax Act 1967 on tax incentive, and OHQ generally refers to a company that provides support services to its offices or related companies regionally and globally. An approved OHQ company is eligible for income tax exemption for a period of 10 years under Section 127, and the income derived from the following sources, which is business income arising from services rendered by an OHQ company to its officers or related company. If the income provided does not exceed 20% of its overall income derived by providing qualifying services, the income generated by an OHQ company in providing qualifying services to its officers and related companies in Malaysia will not be taxed during its tax exempt period.
Okay, next we proceed to our last part of research study, which are limitation, implication, and the conclusion. So under the research limitation, the study, however, subject to the several limitation. The first one is, since the interview session was conducting by using video conferencing, the limit is where this online interview depend much on strong internet connection. So sometimes the sound and the voice of other is not very clear. Furthermore, we have limited time, as the session only lasts for 30 minutes, and due to short experience of Miss Chilling also, because she just joined ASEA for a few months ago before before we interview her. So due to that, we have limited access of information regarding to what and how the tax treatment and tax competition actually practiced by the ASEA company. So moving on to the implication of tax matter, other than DTA, withholding tax, and capital allowance, ASEA imposed tax departure levy to all passengers, and the rate will be charged according to passenger ticket class, either economy class, business class, or business suite class. So from that collection, it would enable the government to further improve local aviation infrastructure, as well as to upgrade airport facilities. So another implication is, due to the current crisis pandemic COVID-19, ASEA has no revenue recorded, and in order to manage their cash flow for 1 year, ASEA expected to cut more costs, including to retrench more staff, and also for uh, they also request for installment from its vendors. Furthermore, in line with economic stimulus package that announced by Malaysian government, airline industry will be given tax exemption and deferments of monthly tax installment for 6 months starting April 2020. Besides that, Malaysia Airport Holding Berhad has also been given some rebate on premise at airport, and parking landing charges, or park or landing parking charges. So with economics with uh, with the assistance from the with the economic stimulus package, it hoped that this package would help the airline industry to mitigate short-term impact due to COVID-19 pandemic. So for the conclusion, it can be concluded that tax computation of ASEA is similar to other industry as well. However, the main difference for ASEA with other industry is the tax treatment will be charged according to worldwide income scope basis, while withholding tax for ASEA will be referred to DTA to get tax relief. And also, there is no special allowances for ASEA. Instead, they can claim for industry building allowances. So that's all from us. Thank you, everyone.